let me define these cycles. So what we're talking about with these cycles is that sometimes the economy is up, and sometimes the stock market goes down, and that has a direct impact on the lives of angel investors and the startups and the VCs and everybody. In 2014 and the first half of 2015, things were going straight up and to the right. So everyone felt confident that we're getting into a bubble maybe, but keep going. Right now, starting in August, out of China, things started to slow down. In the beginning of 2016, we're going into a down cycle, clearly. I like to think of it in three different groups. What does that mean for the startups or the investors that are investing pre-seed, the earliest? Separately, what does that mean for the VCs that are investing in that middle A and B? And what does it mean for those that are investing in Square or Palantir, these big, huge privately held companies that should have had an IPO and they're still private? So it's three separate things. When the market goes down, I think that if you invested in seed stage startups, all the VCs want to see more revenue. And so that becomes dangerous. Investing in companies that are super early with no revenue becomes increasingly dangerous. Investing in the late stage ones, that's dangerous too. You may find that you're investing at a valuation higher than you can sell for because the market was going up and now it's either flat or down. When you talk about investing in normal venture capital, we almost welcome a down cycle because the valuations for the company that we invest in will come down. So if the startup today wants a $10 million valuation for me to invest $1 million and I get 10%, it might come down to $5 million and my $1 million gets 20%. And if the company gets sold for $10 million, I make double my money. Whereas in the up, bullish market, we don't do as well. So venture capital benefits from a correction of the marketplace, and angel investors can benefit from a correction in the marketplace. For that later stage group of the stay private longer pre-IPO phenomenon, they should be very careful of the terms that they invest in. And if they want to support a big valuation, they should write in that they can sell at a lower price if the stock market pushes them down. Well, I think China is clearly the most exciting ecosystem to watch evolve outside of the United States because of the size and potential and the unified nature. I spent a lot of time in Europe, and I still do, and it's not easy to take a startup that's very successful in one European country and take it across a border into another one. And so often you see the same company from Europe or the same one in the US. The US one, if it's working, it's just taking over the big USA. The opportunity in China is really the same, if not 5 times bigger. So I think that the opportunity for China is one that everyone should be involved with. 你们好，我是 Andrew Romans，我们中国见。